Good day everyone and welcome to today's webinar, Handling and Trading News Events. Chris is with me. He will come a little bit later in some 25-30 minutes, and until then I will explain how to trade and tackle news events. Well, probably because this webinar is being recorded and it will be uploaded to YouTube, a lot of traders asked us how to trade news events. And we have our own methods of trading news. I will show you how we do it. And basically, during last couple of years, I have not been active a lot in trading the news simply because I have setups that are very valid during each day, and I don't need to trade news. But some of you might be wondering how to tackle news events. Have in mind that news events is totally different from trading the intraday price action, and because of that it brings a different mindset. You need to switch a mindset when you trade the news, and it's usually scalping. So I will explain this during the webinar. Before we begin, standard risk disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. So those are not suitable for everyone. If you have any doubt and you don't know what Forex is, please have in mind that all information you can have from ironmarketsglobal.com, and this video is not part of the .co.uk website but the globalnews.com website. So today we will cover fundamental views, key releases, currency focus, news trading, and NFP trading, because NFP trading is again a subsection of news trading, so it's a little bit different. So let us start first with fundamental views. Fundamental views are basically, they happen each day. And the main thing is that it's an economic data that tends to be one of the most important catalysts for short-term movements in any market. What I mean by short-term movements, I just refer to those short-term movements that appear to maybe change the trend, and usually the trend is not changed, but rather you see the spike. Usually when news kick in, you will see something like this. Price goes down, let's say for a whole day. Suddenly there is some news and you see the price going up. What happens usually is price might continue to go more to the upside, but then it starts to drop. That is very important concept, especially guys, a lot of traders simply cannot understand and do not understand the basics of Forex trading. The basics of Forex trading imply that spike momentum is totally different from news momentum. Spike momentum is something that traders need to be aware of, because spike momentum usually has the implication of a temporary trend change and not like total trend change. Price usually change its direction temporary. Sometimes there will not be just news, but rather something like it happened today. For example, today we saw a spike on pound dollar, and some people ask me, why do we see this spike if pound dollar is in downtrend? Well, simply put, if you remember what Chris and I did a couple of, let's say a week ago, when we published Article 50, what can happen when it's enacted. Basically, we said that pound dollar is in uptrend and pound dollar will be bought on dips. If you go to our article, you can surely read where we actually we gave our opinion that that pound dollar will be probably bought on dips. Now the main thing is that dips that we talk about, it means retracement to the downside, it wasn't big enough. Basically everything has already been priced in, and what happened is, well, you basically saw that pound dollar dropped to 23.75, and then it spiked almost 120 pips day after, just because everything was priced in. We basically expected the pound to drop maybe close to 20.50 and then bite towards upper levels, even 28.00. So this again proves how that spike momentum in Forex market can also be false, because at least we could have seen some bigger retracement to buy it afterwards. But then it didn't happen, but pound kept making higher highs and higher lows. Basically, we will buy pound on dips. I will do the analysis again tomorrow, and I'm sure that pound now is bought on dips. Again, I was sure like 7 days ago, but I said dips was a little bit overextended. Now, spike momentum is very similar to what happened today. But the main thing is it's 5-minute or 1-minute time frame. That is where you trade the news. You don't trade news on 4-hour time frame, because 4-hour time frame is simply news momentum does not exist on 4-hour time frame. You can either trade 1 minute or 5 minutes. Depending on current state of the economy, the relative importance of these releases may change. Well, now let's say that I prefer to trade pound dollar news, because pound dollar news that can be found on Admiral Markets website, or let's say Forex Factory calendar, you can trade those pound dollar news usually 9:30, 8:30 GMT. It happens usually now, this is now summertime, so it's 8:30 GMT. Usually at that time, we will see some important news for the pound, and usually those news can be traded. But have in mind, I again repeat, this is spike news trading. It doesn't have to do anything with positional trading during the day. It's simply scalp trade. Treat it as a scalp trade. Let's say FOMC may be more important than other news for this month, or ECB announcements. The key to trading news is knowing which releases matter and which don't. This is what we will also cover here. Some news create shorter, but some create midterm impact on the markets. For example, when Article 50 was mentioned, when Brexit news was out, basically pound dollar dropped heavily to the downside, and it kept its bearish momentum for a long time. So basically, those standard news that are tradable do not have midterm impact on the markets. Standard news that we actually are talking about, that we will show how to trade it, they don't have midterm impact on Forex market. It's only short-term impact that can be traded independently on any position. Massive amount of traders are entering or exiting based on news release, and that creates a flux, a momentum. Also have in mind, today, for example, today we have month-end profit taking, but also we have quarterly profit taking, because March is a quarter, like it's 1/3 of the year. So basically, when you have the end of March, you will see some profit taking. So that also explains a possible short-term movement in pound dollar that happened today. But we will see. As I say, I also think that pound dollar is bought on dips. Again, the short-term momentum, what I'm talking about, it's actually month-end profit taking and quarterly profit taking. Simply, it didn't have more momentum to the downside to buy dips on 2050. That is why pound stalled at 23.70 zone, and that is why pound dollar spiked. If we had, let's say, a bigger momentum to the downside, I'm sure that pound dollar would have been bought around 2050. That was our original setup for Article 50 trade. Well, usually, guys, what happens is big, large move following a news release, and then price gets back into the trend. That is also what we wanted to exploit, a big move following a news release, and we want to get back in the trend. But it didn't happen because pound dollar simply made a shallow retracement and followed to the upside. Now, there are dozens of key economic news releases each month. Now we talk about standard news release. We don't talk about Article 50 or Brexit or Trump win or something like that. We talk about standard news release that happen each day, each week. Now, those are interest rate decisions. Have in mind, guys, these are key economic news releases. Interest rate decisions, NFP, FOMC decision, inflation like CPR, PPI. CPI, very important news. You can trade it, also pound CPI. unemployment news, industrial production, business sentiment surveys like German IFO, business climate, or ZEW, economic sentiment, consumer confidence surveys, trade balance, manufacturing sector surveys, and today it doesn't happen very often, but it's key economic release if we have a bank stress test. But sometimes, especially today, we don't have any stress tests, so key releases are usually this this what I wrote above stress test. So from interest rate decision to manufacturing sector surveys. For euro, bid rate announcements are always followed by press conference. You need to know this if you want to trade bid rate announcements. Have in mind those are risky events, but you know how they say no pain, no gain. Very often those important news releases and risky events can yield a lot more pips than the average positional trade. Have in mind that price conference has higher impact than actual bid rate announcement. It's very important to understand that, because usually you will see that when bid rate is announced, and if there is no deviation from the predicted bid rate projection, you will not see a lot of movement. But then when press conference starts, then guys, you will definitely see movement. That is why it happens is because traders and investors simply want to read between the words, between the lines of important presidents, chief bank, let's say when ECB chief Draghi is speaking, you will always see some movement on euro. When Miss Yellen speaks, Fed chief, then you will see movement on US dollar basket. But it does not necessarily mean that the trend will change. Usually everything is simply spike, and then that spike tends to calm down and price gets back into its tracks. That is why you definitely need to understand that those big news are simply nothing more than spike release. They tend to have a short-term impact on market, but price gets back in a trend. Now for, let's say, dollar and GBP, these are key news. Average hourly earnings, non-farm employment change, unemployment rate, BOE inflation report, MPC official bank rate votes, monetary policy summary, official bank rate, FOMC statement, of course, FFR or federal funds rate, it's basically a bid rate decision, and manufacturing PMI. Now, the most significant impact of all releases for dollar is NFP data release. Have in mind that NFP happens every first Friday of each month. So April every first Friday, May first Friday, June first Friday, July first Friday, and so on. And occasionally you will see federal funds rate. Well, usually nothing happens, guys, when this news kick in, but then if we have a FOMC report, or if we have, let's say, just simply press conference, then you need to know, guys, then it will probably create volatility. So this news you can skip, and if there is some conference, if you're eager to trade news, I will teach you how to do that, and Chris, but also, guys, have in mind it's a bit risky, so you really need to be very, very careful, okay? Now also we need to remember our Asian Pacific guys who trade from Asia Pacific countries. Well, for us European traders, it's a bit hard to trade during Tokyo session, but these are also important events that traders who trade during Tokyo can actually trade. So here, guys, you can see employment change, crude oil inventories It has a lot to do with CAD currency, guys. Have in mind that oil is connected to CAD. So crude oil impacts CAD. Very important news for CAD. Employment change, unemployment rate, CPI. Chinese data is very sensitive, very important. You need to know that Chinese markets are very volatile. You need to watch Hang Seng index. It's very volatile index, and Chinese data release will have a huge impact on yen currency pairs. Official cash rate for New Zealand. Basically, this is the only tradable New Zealand release that I know of. At this point, it's simply New Zealand is very low range pair. It tends to move in a very low range. It's not very tradable from intraday positioning side. You will usually see some movement on the pair that is very restricted, and it does not tend to have a big impact on Forex market on New Zealand dollar pair. But as I said, we use it simply to place our potential spike trade and then get out of market. As I say, it's not for people who don't want to trade news releases. It's for people who prefer to trade scalp trades on news. Okay, so have in mind it's a volatile release and treat it as that. Simply do not think that the release, even though if it's in a mid-range or low range, it's not to be volatile. Every cash rate decision is volatile, especially when you have statement. This is most important. BOJ outlook report, BOJ policy rate, monetary policy statement. Now the question, why euro dollar is falling so much? I already explained, if you read my analysis today, why euro dollar is falling. I hope that you went through the analysis that I will show you now. I simply, this is my opinion why euro dollar is dropping. Just quick answer. Simply because possibly we have a profit taking. I explained it 5 minutes ago. It's monthly, guys, it's monthly end. You need to understand it's monthly end profit taking. It's also quarterly end profit taking. And definitely because some hedge funds, okay, also made profit taking because French elections grow closer, okay? You need to know that French elections grow closer, and pound dollar was also dropping. It created a divergence in euro GBP pair. Now euro dollar is correcting, and this is where I think we could buy euro dollar from. This was sell, this was buy, possibly it's contained here. So you see, it was not directly connected to any news, but the thing is that, as I say, news it's not literal news, but you need to treat every time the end of month or the end of a quarter as if it were for news release, because price tends really to surge and it tends to give us some moves that can be only described as profit taking. Now, what is currency focus and news focus? US dollar, British pound and euro belong to the first group. First group can be traded in London, New York session. Simply said, I don't see any point to positional trade euro during Asian session. I mean euro dollar, because Asian session is usually for New Zealand yen or Australian dollar. So there is no real point on positional trade euro during Asian session. You want to positional trade euro and dollar and pound during London session. Canadian dollar can be traded during the US session. Australian dollar and yen are third group, that can be traded during Tokyo session. In the third and fourth group belongs also New Zealand dollar. So these are London, New York session, this is New York session, this is Tokyo session. And occasionally Wellington session if we have cash rate announcement for New Zealand dollar. Also guys, not each news can be traded. Use only news that I have highlighted in this PPT. Usually when I traded news, I traded pound, dollar, and NFP. I traded euro, dollar, or dollar yen on NFP. Not each news is tradable. That is why I say you need to distinguish tradable and high impact news. Not each high impact news is tradable. Okay, and you want to focus on specific news. These are specific news that you can try to trade pound dollar. Pound dollar, as I say, is a volatile currency, but it can be traded on these news. Claim and count change, MPC asset purchase facility votes, MPC official bank rate votes, unemployment rate, average earnings index, services PMI, manufacturing productions, and CPI. Most of those are unemployment and inflation reports, but have in mind that those are tradable news. Okay? Pound dollar is good because usually it goes in a single direction, in contrary to euro dollar. Euro dollar news usually have some whipsaw spikes momentum after the news has been released, but pound dollar usually has one directional moves in any direction that is distinguished by news deviation. I personally use Almira Markets or Forex Factory Calendar. These are examples from Forex Factory Calendar. But guys, it's very simple. Simply said, we want to see either a red or green number at Forex Factory or AM Calendar. This is prediction. This is current release. So if current release is higher or lower than predicted with some deviation of, let's say, 0.3 for CPI, or let's say some 2-3% for other news related possible trades, you can actually trade the news. So you need to see these numbers. If the deviation from the predicted number is high, then the news spike will probably be higher. So let's say that this was prediction for 2.5 CPI for GBP, and CPI came with 2.2. Usually we see an instant drop on pound dollar. But if this news release, let's say, showed, if it had showed 1.2%, then the news drop would have been much more extended. So that is why I say it's also important to watch deviation from predicted result. Always do demo news prior to live. It differs a lot from classic trading because we trade spike. And the thing that I will show you now first is proactive setup. Usually we enter it 5 minutes after the first candle close in the news release direction. And we trade pound dollar, guys. So this is for our news trading. Conservative stop loss 5 pips above below the candle prior to setup candle. Aggressive stop loss 10 pips above below the setup candle. Okay. Targets are A, Almira Markets out of the pivot points. Use trailing stop once you're in profit, and depending on your stop loss, aim for 1-to-1. This is the example. Construction PMI, as I already explained, that was tradable news. Here we have good numbers. So 5 minutes prior to news, you need to open your chart. Wait for first 5-minute candle after the news to close. So this was setup candle. And if the news came out good for GBP, you just need to trade the first breakout of the setup candle. So this candle is, okay, news candle. Immediately it was a spike. But then you saw that next candle is stabilizing the price. So this 5-minute candle after the news is called setup candle. Now the news was good, so we trade immediately to the long side. And this is the profit. You can close profits by using Almira Markets pivot points. This is when CPI came bad. It was worse than expected. So this is our setup candle, okay? And basically this is our entry. Here the news was red, so we want to take short trade. This is where you place your short trade. Exclusively on 5-minute time frame. Okay? Again, guys, example. You traded this setup because the news was bad. This is where you place conservative stop loss, and this is where you place aggressive stop loss. Another example, MPC official bank rate votes. Let's say this was bullish for GBP. This was candle, setup candle. Okay, news was good. This is where we place our entry. Stop loss would probably go, I would go with this kind of news. I always place conservative stop loss because these kind of news releases tend to whipsaw the price a bit and then spike in either long or short direction depending how the news was translated. If we can read what these votes mean, and if we can understand the statement that MPC does after the vote has been enacted, then we also understand that the news is either bullish or bearish. Concerning that this was bullish news, we would only take long setups, and long setup was initiated here. So it's very easy to understand this. Okay, here it is, for example, New Zealand dollar. Okay, this was, let's say, better than expected, although we didn't see any number here, but let's say it came better than expected. Okay, so we trade news. This is, guys, when news was done, set up candle here, stop loss goes there, below this. Okay, so here the price was first dropped, and then, but we only want to take a long trade. So this is where we place a long trade at the break of the high of the setup candle. Remember, setup candle always goes 5 minutes after the news has been released. What is NFP? NFP represents the total number of paid US workers of any business, excluding the following employees: general government employees, private household employees, employees of non-profit organizations that provide assistance to individuals, and farm employees. The advantage of trading NFP is it's very volatile, it can be profitable, but it may give us a prevailing trend also for next couple of weeks. So that is the advantage. Disadvantage, of course, it's very volatile, so you really need to be on the right side of the trade. There are initial whipsaws, risks are very high, there are irrational movements, and pairs to trade are euro dollar, pound dollar, and dollar yen. How do we trade this? Open 1 minute chart, watch for deviation from forecast, green and red numbers, wait for initial spike in news direction, then draw a Fibonacci. You enter at 78.6. Stop loss 10 pip below last high, low, or 1 minute chart. So guys, I exclusively traded NFP by entering on 78.6. So if this was the low, this was the high, NFP numbers were good for dollar, bad for were good for euro, bad for dollar. It means that euro dollar would probably go up if NFP and unemployment was bad. So this is 1 minute chart, the first spike here, it dropped here, you see it continued to drop, and then it spiked heavily to the upside. So basic principle is just draw Fibonacci. If the numbers are okay, 78.6 is your entry. Here guys, everything was bullish for dollar, and let's say this was dollar cross, okay, here, and what happened is price went up. Okay, good numbers on dollar, say this, let's say this was dollar Swissy, so the numbers were good, it came to 78.6, stop loss goes below, 1 minute candle, and spike to the upside. So you need to be very fast and nimble on your fingers because NFP is volatile. Another example, euro dollar, okay, euro dollar bad NFP numbers. Euro dollar should go up. Sometimes you will see this. Price does not retreat to 78.6, but it rather spikes after 23.6. If this happens, guys, then you can enter here at the break of this candle and treat this as a scalp trade. Because usually at the first break of the 1 minute top after the news, you will be able to make 5 or 10 pips instantly. You need to be very careful though. As I say, it's NFP and it's very volatile release. Okay, so this was everything I had. If you have any questions, please do not hesitate to ask me. Chris will show his part. I wish you safe trading, and any question you have, just send it over. Thanks.
Hello there. Sorry, everyone. I was distracted there by a phone call. I'm here. I think Nana had already explained so much that in a way, I don't know what to add because Nana really went through a lot of things there. But I'm going to add some parts that I think are important and place some emphasis on the key parts that I think are vital. Now, I'm trying to share my screen, but unfortunately, it seems to be a bit frozen, I believe. Is the screen sharing working at this moment? Do you see my screen? Probably not, but no, I have it now, finally. Okay, took a bit longer than usual. So there we go. You should be able to see it now. Just a quick confirmation that you can see the screen. Please, through this chat. Yes, no, hopefully yes. Great, perfect. All right. So basically, calendar, and I talked about it, of course, that's where you get the details, but be aware, of course, about press conferences, unexpected announcements, unexpected or maybe not hidden speeches, not hidden, but not so well publicized. These are all things that could still impact the news flow. So it's something you want to be aware of. As a news trader, of course, you want to keep an eye on the news flow and be aware of that and keep your eyes and ears open, right? So that's something that's important. The calendar, but the official calendar, but also things that are, not as clear, not as visible, all right? Now, personally, I should also mention that I am not a news trader, so I'm just going to share my experience with news events in general, why I think that certain things are important, like supply and demand, for instance, all right? So the news event is basically like a measuring point. It's a measuring point for the economy, for the currency. All right, so it's kind of like a scorecard. And how does it score versus the others? So it's always the balance. With currencies, it's always a balance between one country, one currency, and the other. So one could relatively do well, but if the other country and if the other currency is doing even better, then it doesn't really matter. The other one is still beating the first one. And that is important. So it's, in the currency market, it's always best if you find the weaker one and the stronger one. Relatively best to avoid trading stronger currencies with each other or weaker currencies with each other because those will tend to not just move as much. So it's always that balance between those currencies. And those news events are kind of like giving us new information, new updates, new data about the current status at that point, at this moment. We have kind of a story in mind for each country. We have kind of an outlook, right? And if you don't have that at this moment, that's okay. But it would be good to get a feeling for that as a news trader, right? You want to build a bit of a database in that for those numbers, for the economic data, just to get a bit of feeling when a news release is happening, what that news release is meaning. Of course, you got the forecast numbers are announced. When you look at that one market's calendar, you see previous and forecast numbers. So that will give you some feeling. But that's, I think, not enough to trade them, right? You want to get, and not all of these events are tradable. Nana already talked about that as well. But you want to go a bit beyond that and get a bit more feeling and, and kind of aptitude for it, if that's, yeah. So basically, each of these news events gives us a new update in that story, right? So if we look at the U.S., for instance, of course, major world economy pushes the global economy very strongly, very important for the world. So each of these numbers, when they are released, will give us more information. right? So back when the Great Recession happened and the numbers slowly trickled in and they were increasingly becoming worse, that's showing a downturn, all right? Whereas a couple of years ago, the numbers started to slowly tick up. Last year, it started to improve even more. So that's showing, okay, there is a recovery coming up. So each of these data points kind of gives us some information. But of course, we have to be aware that not each data point will give us the full picture. Sometimes these data points will be, let's say, anomalies. There will be exceptions. There will be weak points within an uptrend. There will be strong points within a downtrend. So we got to look at the bigger picture. Got to understand that not each data point will be everything. Each data point is important, but we also have to look at the sequence events, the trend, the bigger picture, and see what that data point is saying us within that bigger picture. Okay, so that's what the role is of news events and calendar updates like this and statistics. Okay, also looking into how the statistics are made. Is there any change compared to the past? These are all things that will give you more information. That's never, wrong with gathering more information about those statistics as well, if you really like this branch of trading, all right? In the long run, from a long-term perspective, there is basically a supply and demand balance that I think is key when determining which currency is going to be the winner and is going to be more valuable. So there are a couple of things I think that impact demand and supply basically. And it's that balance between demand and supply for each currency, all right, that kind of gives the value of that currency. And that value of that one currency is compared to other currencies, and then there will be a movement in price in the long run. Okay? That supply and demand balance, all right, is influenced by, from the demand side, by inflation, because inflation going up means higher interest rate. Higher interest rate means more compensation for traders and investors and people in general who hold that currency. Therefore, there's a higher interest in that currency, so that's good for the currency. Another factor is the debt to GDP. That has to do with the default risk. The higher the debt in relationship to the GDP, the more riskier that currency is, the less attractive the currency is. And the more interest rate typically traders and investors require for that currency because it's riskier. If there's a low debt versus GDP, it's always about this ratio because the debt could be high, but if the GDP is high too, then that ratio is not that bad, right? A big economy can handle the bigger debt. A small economy can only handle the smaller debt. So it's always about that ratio. So if the ratio debt GDP is average or lower than average, that's a good sign for investors and traders. They will not be, especially the long-term investors, of course, will not be discouraged to hold it because the risk of a default is small. Of course, if that debt gets higher and higher, the risk of a default goes up. There are ratings about that, basically about the default chance by rating agencies that show they rate it from various ways, from AAA to junk status and stuff like that. That will give you an idea about the default risk. Defaults do not happen often, and when we look from a year-to-year perspective, it's not like 50 countries are defaulting this year, right? No, that is not the frequency we're thinking about. But if you look over the centuries, of course, and that's something very interesting, you will see countries, their defaults do happen, right? I mean, look at, for instance, the sovereign debt defaults of the West. You would see in Europe, for instance. I don't know by heart. Maybe I can quickly look it up. I didn't think, didn't think about it beforehand. Let me check it quickly. But you will see that it happens a couple of times within those centuries for one country, right? So, that risk is there. One second, folks. Let's see if I can quickly find it. So yeah, that's basically in the meantime, that's the demand side that influences it. Supply is of course pretty straightforward. It's how much money is available in the country, or not in the country, but it's just basically how much currency is printed, how much currency is made available by the central bank. Nowadays, there's really no limit to that. The central banks do aim for inflation of 2%, so they will basically tighten or loosen the supply to get to that level and to reduce that, or get to or go back to that level. That is their target. So, but there is no gold standard, for instance. Gold does not have to back up that, that currency amount. But of course, basically, the currency, the supply of the money is backed by a revenue stream of taxes, right? So there is something backing it, the economy basically. So yeah, the supply, monetary easing, the money supply, that is the supply itself. So if there's a lot of supply, right, then of course the value of that currency is decreasing. If there are not, a simple example, if there are $100 bills, 100 $1 bills in this room where I'm giving this webinar, and all of a sudden it goes to 150, one of those dollar bills is worth less when they're 150 compared to 100. Logical. Each dollar has less value in that case. Okay? So if there's monetary tightening, right, and there's less money floating around, then each dollar is going to be worth more. Okay? So it's that balance. So when I look at those news events, I'm always keeping it in mind, how is it impacting this supply and demand balance? How is it impacting ultimately these factors? Each of the news events impacts these things in different ways. So for instance, the GDP growth, for instance, will give us more information about the GDP part, obviously, right? The budget deficit or surplus of a country will give us more information about the debt or the growth or decline of the debt. Core retail sales and consumer prices will give us information about inflation. Housing market will give us an idea about rising prices or not, stuff like that. That will all work itself again towards the interest rate. So when those news events arrive, basically the first reaction, the first split second is something that we can't even see. And that is basically something that algorithms react to. We're talking about probably a tenth of a second, or I don't even know how fast that is. But we're talking about something that is really, really so fast that the human eye would not be able to respond to it, react to it, and profit from it, right? This is the battleground of algorithms and high-speed programs from hedge funds and banks that are close to the center of the action as well. Is the sound working? Testing 1, 2, 3. Is the sound working? I have one person saying that there's no sound at the moment. Testing 1, 2, 3. Sound working okay? Okay. Good to know. One has sound. Any others? Hopefully. All right, probably so, but if there's anyone who can confirm it, that would be great. So, unless you are the type that likes to make algorithms and enjoys that programming work, that's not going to be simple, I would say, but it could be one way to go. But as human traders, we can't react that fast. So we basically need to give time to the event to settle down. We need it to at least have 1 minute, to see a 1 minute candle, because everything within that minute is just rapid. Okay, unless you have some battle plan already based on support and resistance levels, perhaps pending orders, which, I'm not saying that I personally don't trade that way, but who knows, someone that maybe out here is trading that way. That is a different story. But if you're waiting with market orders, right, to trade the news event, then it's best to wait a minute for at least to see the minute candle, all right, because within that minute, it's just so fast. These events typically, as Nat has already mentioned, NFP, FOMC, U.S. unemployment, big events like elections, Brexit, interest rates, inflation figures, those are all where typically the events could be big. But what I think is best is to at least wait for the 1 minute candle to finish. As I already said, look at the right lower chart. You see here a minute chart. This was the news event on the 15th of March, which was the, I think, the interest rate decision on the U.S. 2 weeks ago. And you can see a bullish candle on the 1 minute chart. So who knows what happened in that minute, but it's really difficult to trade anything within that minute. I would not advise it. I would not even think about it. So after a minute, you have a candle at least. There are traders that look at 1 minute candles and trade that. I'm not a news trader, but I can imagine that trading a strong candle like this basically is doable. You can see the price does continue further like that. Surely you have also false candles like this, but I like to look at candles. Price action is king. I love looking at candles, and I'll explain how I look at candles in just a second in a slide further on. So basically, I think that tackling news events with price action is always a good way to go. Of course, you could have some indicator combinations. I'm not saying that could be useful too, but ultimately, I think the most value is looking at candlesticks and price reactions or price action. If it's a 1 minute or a 5 minute or an hourly candle or a daily candle, all of them have value. Let's take a look at that a bit more. Let me make this a bit bigger like this so you can see it here. All right, there we go. So this candle right here is a 5 minute candle. No, it's an hourly candle. Okay. So that shows you, this was the news event, the hour of the news event. That's a big candle. So if you look at it, you have up momentum, a retracement to the 61.8 fib, and price breaking through a resistance trend like this. And this is the hourly candle. So look at that candle. I'll explain why this candle is so great in just a second. But that's a strong hourly candle. So a lot of things happened in that hour. A huge news event was that occurred in that hour. So if a candle like this appears after the news event, within the news event, then that's a sign of strength in this case. Not all candles will be like this. This is a strong candle. I'll explain why in a second. And you can see indeed a continuation, a channel occurring actually that gives continuation. Let's take a look at a 5 minute chart example. All right, there we go. 5 minute chart example. No, this is a daily chart. Sorry. This was the 5 minute example. Okay. Yeah, that's the 5 minute candle. Let's take a look at the daily chart now. And you can see, look at that daily candle close with the green arrow there. You see that candle was a strong candle and showed good price action. So there are different ways of trading it depending on what time frame you want to look at. If you're a scalper, you might want to look at the 1 or 5 minute chart, right? If you are more of a swing trader, you might want to look at the hourly chart. If you are more intra-month or let's say an intra-week trader could look at the hourly, intra-month or swing trader could look at the daily or long-term trader. And if a daily candle is looking like this, as an investor or swing trader or long-term trader, you look at a candle like that. That candle, this candle with the green arrow, is the day that the news event took place. So when that day closes, that daily candle closes, it will reveal a lot about the psychology of the market for that day. So if that candle is strong or weak, it's important. It's more important than any other day because the participation in that day is high. Why? Because of the news event. Each daily candle, of course, has its value. Each daily candle has some importance, but not all daily candles are necessarily equally important. When there's a huge news event like that, that day there's a lot of participation. There's a lot of interest. That means that that particular candle will also have more impact on the market. So if that candle is strong, which it is, that it will have a high chance that it will impact the next days and the potential movement and direction. And indeed, look at that upside continuation for the next 6 days. Maybe not a ton of movement, but still, I guess, what could it be? Let me quickly check. Almost 200 pips. Okay, so, but it also indicated the correct direction. Once again, this candle, important. So whatever it communicates is extra important. All right, so what are strong candlesticks? Because why is that daily candle strong? Why was that hourly candle strong? Why was the 5 and 1 minute candle strong? Basically, there are two components that I think are very, very important. The candle wick and the candle size. The candle size is relevant to, is also basically relative to the time frame. So that is something you got to get a feeling for, but you can also just quickly look at the chart right in front of you and see, is that relatively average, large, small? Just, you know, making a quick kind of guesstimate by looking at the current chart is not a bad approach. You typically can see what the average is by just looking at that. You can add an ATR, see what the ATR says, and see if that current candle is bigger. Measuring the candle size, by the way, is simply done by taking the low and high and subtracting that. So that's pretty straightforward. But generally speaking, it also depends on the currency pair. So, you know, it's difficult to give exact numbers because it depends on time frame and currency pairs. So there's a lot of info there that could change it. But, you know, if you're looking at the euro dollar and you're looking at an hourly chart, 30, 40 pips, hourly candle, 30, 40 pips is a decent size. If you're looking at a 4-hour candle, 50, 60 pips is a decent size, right? Above average, probably. You know, even 40 pips for a 4-hour chart is about average. Anything around 20 is small, though. Now, if you look at the pound yen, you could be looking at maybe doubling that. Let's say a good size candle on the pound yen hourly chart could easily be 50 pips, right? Because it's a higher moving currency pair. 4-hour chart, perhaps 70, 80, or 90. Not to say that 50 or 60 is bad, but that's probably about average for the pound yens. But those are just figures I think are pretty accurate on the top of my head from experience. But best is really to look at the ATR or just look at the chart and see if that candle is about average or bigger than average, has a big size. The bigger the size, the more important that candle is, the more impact it's going to have. Small candles are not that important. The candle wick is important because it shows whether there is strength. If there's no wick or small wick, that means there's a strong candle close. Let's take a look at that daily candle again, or the 1-hour candle. That candle close, as you can see here, is very near the high. Do you see that? The wick on top is small. But if the wick on top is big, for instance, we don't have many examples on this chart, but okay, maybe the best one I can find is here. If the candle wick is big, then that indicates weakness. So small wick, strength, big wick, weakness. And basically on the left, you see a perfect example of an hourly or 5-minute candle, I think this is, where the candle close is very near the high. That indicates strength, bullish strength, of course. All right. If the candle close is near low, if this were a bearish candle, if it would be opposite, right, that would be bearish strength. The red circle indicates an example where there's a huge wick. On top, that indicates basically bullish weakness or maybe not bearish strength, but at least bullish weakness and potential for a retracement or reversal. So that's how the candle close or wick is important. I personally measure the high and the low, so I know the candle size. Then I measure the close to the high or the close to the low, depending if it's bullish or bearish. So in this case, for instance, let's say that this candle is, let me check, about 50 pips. And this is maybe only 4 pips away. So I divide 4 by 50, or 4 divided by 50 is less than 10%. 5 is 10%. So it is about 8%, right? So what I typically, that's how I calculate it. And the rules I use for that, 0 to 5% is super excellent. That means that there is no loss of control for that side, and there was extreme strength. 5 to 10% is excellent too. Typically 0 to 10% is excellent, right? Within 5% is just really excellent, and 5 to 10 is, or yeah, that's basically excellent, okay? So 10 to 20% is very good. 20 to 25 is good, I would say, and 25 to 33% is okay. So I don't think I wrote down those numbers. I didn't think, no, but I can write it down here. So 0 to 10, excellent. 10 to 20%, very good. Then we have 20 to 25 is good, and 25 to 33 is okay. We're talking about percent. So if it's between 25 and 30, you know, or even 20 to 33 roughly, it kind of depends on the overall structure of the market. What are patterns saying? What are support and resistance saying? What's trend and momentum saying? Typically to 0 to 10, 20%. If there's a good candle size and the close is within 0 to 20%, that's typically pretty valuable information that that direction is solid and will not show weakness and will continue, most likely. If it's more than 33%, anywhere between 33 and 50 is indecision. Between 50 and 67 is weakness, but that depends on the overall structure if I would trade that weakness. And more than 67% wick is definitely weakness and is something seriously to consider trading that weakness. Not flat, it's not something flat, outright something I will do, but if the wick is more than that and it's a decent sized candle, it is something that is worth investigating, a reversal trade, a weakness trade. So these are the two main things I look at, and I think there's a lot of things that can be done with these two components. Other things to consider are candle close versus the previous candle close as well, candlestick patterns, formations of 1, 2, 3 candles in a row, and of course support or resistance. If there's support or resistance close by and there's weakness, that could indicate the bounce, for instance. If there's candle strength that is poking through support or resistance, then that could indicate a breakout. So the location of support or resistance is also important. All right, that was my part. If you have any questions, feel free to let me know. In the meantime, please check out Admiral Markets, of course, the YouTube channel, for instance, Facebook, or the website itself. I hope that this part, despite the fact that I'm not an illustrator, still helped you in some way. More webinars will be available, of course, as you already registered. You probably know education. Click on Forex and CFD webinars. Next week we have a full lineup, of course, again. You can check out our analytics perhaps in the mornings and throughout the week. Fundamental technical wave analysis, including articles as well, or the platforms, MetaTrader 4 Supreme Edition and MetaTrader 4 WebTrader. Great stuff there. A lot of tools and indicators extra through the MetaTrader 4 Supreme Edition. Any of you that are interested in trading news or that are doing it already, you can see who is thinking about it or who is already doing it. But yeah, I hope that this gave you some insight about that. Yes, it will be uploaded to YouTube indeed. As far as I know, I think Nanette is recording it at this moment. So it should be uploaded soon. So keep in mind those news events. Keep in mind always that balance about supply and demand, and never underestimate, the importance and the value of looking at candlesticks and the information that we can read in those candles. A lot of info there, and that the next thing, of course, is using that for a trading plan, and that's something that might be good to check out the live trading webinars on Tuesday, Wednesday, how I trade those candles, for instance. If it's a strong candle, using the candle lows or highs for stop losses is good. Maybe depending on which candle, waiting for a retracement of the candle or an immediate entry upon the candle close. Those are things to consider. But I wanted to talk about the importance of candles, the importance of how those news events tie into the bigger picture primarily. I didn't want to talk specifically about trading the news itself because I don't trade the news myself. So, I don't have that particular experience. But I do have experience with the candles and interpreting the news in the bigger picture. So that was the focus of today. But if you're interested in trading candles, I would invite you to take a look at next week's webinar, Monday, Tuesday, Wednesday. We will take a look at some setups. All right, folks, that Nanette and I use. Thanks again for being here. Wish you all great trading, and talk to you soon. Cheers.